In this video, traders, we're going to review a pullback after a breakout trade on a US stock. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Alright, so a pretty common pattern to trade, and one which I've talked about many times before, is the kind of break through a key level. So if you imagine that was a key level, the rotate back, finding some way to go long and pushing back higher. Now the textbook has a couple of ways of getting into this product breakout trade. Number one is taking the break. Number two is buying the pullback, and I've talked many times before about buying the kind of pullback to the break. Now in some conditions you kind of have to say to yourself, right, I'm going to weigh up the consequences of getting in early versus taking some heat. But obviously if you're taking some heat, you're going to have to take a lower position size. So sometimes you go to yourself, right, well, where do I want to take the trade? Where should my stop be? How should I get into this deal? I want to show you this Twitter that I took the trade on, this Twitter, and kind of my thought process behind it. Now who knows where it will close today, who knows where it will go. In actual fact, that's not so relevant. What's relevant really, and I mean hopefully me sharing with you the kind of thinking that I had for this trade and how I set it up, how it came about, may help in some ways, and hopefully it does. So anyway, I'm looking at the market in general. Let's go through the whole process. I'm looking at the market in general. Let me take off the view app, and generally speaking, yesterday we had a bit of a hammering. There's a bit of a hammering yesterday. Clear that as well, go on to the cursor. Bit of a hammering yesterday on the Qs, which is the Nasdaq ETF, and today we're picking up okay. If you're on a 15-minute, we're kind of a little bit of a gap higher, filled the gap, and we're kind of chugging along. Nothing revolutionary, nothing amazing. We've still got that high there, but it's okay. So we haven't got that continuation to the downside, and so I yesterday had prepared a few stocks that I was looking to buy. One of them I was already long. I closed out today flat because I didn't like the price action. Well, a very small profit because the price action. I'll maybe share that in a different video, but don't want to kind of get too noisy with this video. So anyway, my thought was, okay, if I can pick out some strong stocks, I'll buy some for maybe a day move, 1 day move, 2 day move. I'm not going crazy at the moment, and others are kind of in agreement with me with this. If we're buying strong stocks, which worked superbly well for a long period of time, we've got to be mindful at the moment. The current conditions are a lot more rotational. There's little shudders coming out of nowhere, so you've got to be kind of pick your moments, so to speak. And a couple of stocks that come into my radar was this ALGN, only because it's holding at highs, and this is why it's coming to our radar, guys. I'll try and be brief with this without going too overboard. Earnings are coming, bang, hits the earnings gap up. And then we're flagging at highs. I like stuff that's flagging at highs, and so this has come into my ecosystem, if you like, and also Twitter had done the same. You had earnings. We've got earnings coming up. Sorry, we had a gap up based on some kind of news. So again, a catalyst. Gap up above all-time highs, which is super important. And then we're holding at all-time highs. So even though yesterday we kind of had this sell-off in the market, and Twitter did sell off as well, it held quite nicely. So my kind of thesis with this was, okay, maybe I get a little bit of run up to earnings from this. Maybe I get a 1 day trade, maybe I get an intraday trade from this. If I can see some strength, I'll buy it. So I'm looking at this, I'm thinking, right, well, obviously the kind of resistance level here is at $50.50. I don't particularly want to buy it on a break of that because I'm looking for more. Now, if I was being a very aggressive trader, I had like a 15-minute window, I probably would be okay with buying it, chucking it out for 50 cents, put it in the pocket and looking again. But I'm thinking maybe there's a bit more to this. Maybe there's $1 in this. Maybe there's a couple of dollars. Maybe we get another day run. Depending where it closes today. If it closes at highs, great. I'll probably hold it for day 2. If it closes, comes back down, and kind of sits around the 50-50 level, I'll probably come out of it. I'm not looking to hold this with current conditions very two-way. I don't want to overexpose myself to overnight risk. But the chart's bullish. The price action is bullish, and so I had an alert set as we broke through this high. Great, I'm watching it now. As it comes back to here, I'm thinking, right, I don't want to be chasing this here. I don't want to be chasing on the breakout. I don't want to be chasing it here. The very last thing I want to be doing, but I'm happy to buy it on the pullback to here. So as the market comes back, $50.50, I had a limit order in and got filled at 50.50. Fine. Now, where's the stop? This is kind of the point, I guess, of the video. Now, my stop, I kind of looked at the VWAP and said, well, the VWAP's just there. Really, we shouldn't be going, much into this $50 range. If it goes anywhere near $50, I'm just not interested in the trade. And so a little tickle above $50 gives you a 50-cent-ish stop, 47 cents or something stop, and that gives you an okay risk reward as well, because we could easily do a risk reward 1-to-1. I'll go back to the highs of the morning. Would be 50-cent move, 70-cent move. Fine, that's a 1-to-1. And if we do get that multi-day move that I'm looking for, then we're getting 2-to-1s, 3-to-1s. So 50 cents risk seems sensible. Now, why didn't I put it at the VWAP? Because that's quite a tempting thing. I was thinking when the price is here, VWAP be here, could put it at 30. Well, yes, it's tempting that, guys, and I could dial up the size a bit more. 20 cents risk reward ratio looks great. But when we've got a two-way rotational type market, it's just a death by 1,000 cuts syndrome. You have to have the stop wide. Take the 50-cent stop, go, right, what? If it goes back to 50 and a little bit, I'm not interested, because listen, the theory is it's a breakout. I'm happy to have a little bit of noise under. I'm happy to have a little bit of noise under the VWAP. But if it's going right down here, and listen, it didn't go too far off, to be fair to it. But if it goes right down to the $50 level and a few cents, I don't want it. The thesis of the trade is gone. It's a 50-cent risk. The risk reward ratio then still stacks up because 1-to-1 at highs, 2-to-1, 3-to-1. Get a 3-to-1 easily, 4-to-1 maybe if you're getting another day run. But if we close the day at highs, I'm going to it wouldn't be so bad even if I end up scaling at half the position. So, it's number one is thinking about the conditions of the market. If we'd have been a rampant bull run like we had been not too long ago, I probably would have bought that on the break, if I'm honest, especially early morning. I might have even preempted that, guys, on the kind of gap up and gone, what, it's strong, it's gapping up, let me get some size on before the break and let me ride it through the break. Possibly ride it through the break. Even if I didn't buy on the break, I think the higher, tighter flag and not perhaps being so patient for 50 would have been my play, and then I would have had perhaps a tighter stop. I wouldn't have given it so much room. And ultimately, if this chart happened during that, I'd have been stopped. But I think when you've got the strength of the underlying market forcing everything higher, you can be a bit more aggressive. You can take on a bit more size because your stops can be a little bit more narrow. However, when you've got two-way markets like we're seeing in the Qs, like we're seeing generally in the overall market conditions, even though I'm filtering for strong stocks and perhaps weak stocks, I haven't traded any weak ones for a while, but strong stocks and picking those off at specific price action points, even then you've still got to be reasonably wide with your stop. Why? Because let's say the market pull back in and let's say the Q shot it at the same time. And in fact, I think they did, thinking about it. If they shot it at the same time as that pullback, what time do we have the actual drive lower? Let me just check for you guys. We had it about 3:30. So no, actually they didn't pull back. But if they had, we're about 3:30. So a little bit of a pullback. If perhaps those Qs started to go lower back to under the morning low, that Twitter, regardless of whether it's a strong stock or not, could have got a real shudder. And so you've got to have a little bit of leeway with it, even though you're picking out your price action trades, you're filtering, you're saying, hey, this is reasonably strong or reasonably weak. Look at the current conditions. And unless the stock is an exceptionally strong stock or exceptionally weak, and you're playing and that the way it's moving is purely from that stock rather than the market, you've got to take into account the bigger conditions. Now, I don't know whether this trade's going to be a winner or loser. It just came to my mind. I thought I'd share the thought process with you, and you guys can kind of comment if you like this kind of stuff or not. I've got a couple more trade reviews that we'll upload at some point as well. And again, I'm not going to cherry pick anything, guys. Real world doesn't always work as you want it, and this is trading, and how we get better as we start to analyze and diagnose the decision making process we made for winners and losers, and we try to get better at making the right decisions and putting a throttle down the winners, and we try to identify where we could have improved if we have a collective losers. Can't always do that, but if you keep your risk order ratio right, if you're picking the right kind of markets, whether you're trading currency pairs or you're trading commodities or whatever, then it just becomes a law of numbers. So anyway, guys, we'll see how this closes. Doesn't really matter now. I'm not concerned. You don't want to be in any trade that you're concerned about, but I want to share that process with you anyway. Anyway, guys, take care. See you next one. Bye bye.